And the reason we've modeled 0% in 2028 is we think, generally speaking, using our magical crystal ball that we have here to tell things about the future in advance.
Is that what that's for? Hey everybody, welcome back to Chipstock Investor. Today we're going to be talking about BE Semiconductor, or simply BESI.
Many of you probably know about the really big Netherlands-based chip manufacturing equipment provider ASML Holding. Not so many folks know about BESI, also based in the Netherlands. Maybe not quite the dominant player in a specific type of chip manufacturing equipment as ASML, but nevertheless an important one.
Let me just remind you to hit that subscribe button. Free and easy way to support us here at Chipstock Investor. And make sure you check out our Semiconductor Insider membership here on YouTube or over on our Ko-fi page. The link is in the description below. It's only $5 a month and gets you access to the wonderful community of investors over on Discord, as well as live events on Discord, published show notes, video manuals, and fun for just $5 a month. Nick, walk us through the cycle trend chart that we have created in the semiconductor industry.
It's been a nasty downturn for the semiconductor space for the last 2 years. We had the massive spending sprees in the wake of the pandemic, which led to a big fall off, especially in things like consumer spending. Even businesses pared way back on cloud and enterprise computing. Auto and industrial was the last domino to fall. All of that kind of got obscured and maybe propped up a bit by NVIDIA's AI or simply accelerated computing infrastructure party that got started in early 2023. The good news here is that downturn across most of the market for the semiconductor industry is finally coming to an end. We're at the cusp of a new growth cycle across the board. That can mean really, really dramatically good things for a company like BESI.
This is our semiconductor manufacturing process flowchart, all the way from the engineering of the semiconductor to the final device. You can see that BESI fits into that dicing and packaging portion of the industry right before it goes into the final device, like your cell phone.
Some of our oldest investments in the semiconductor manufacturing equipment part of this industry plays in the packaging space as well. Applied Materials, very much a prominent player here. Other companies that we frequently mention or cover on this channel, Lam Research, Tokyo Electron, also very large players in packaging equipment. We often call companies that participate in the actual manufacturing equipment part of the industry an oligopoly. They control a critical choke point in chip making. The reason for that, as explained here by this slide from BESI, is you have all the companies that actually manufacture the chips. You have companies that design the chips and design devices. And if you want to ultimately get to those final devices, you have to have somebody to provide the specialized equipment to make it all possible. Another way of illustrating that last slide is just simply our semiconductor industry flowchart. Wafer fab and chip packaging equipment right there smack dab in the middle. Pretty much everybody has to go through these businesses.
Nick, you mentioned that Applied Materials also has packaging equipment. Tell us a little bit more about where that fits into this discussion.
Yes, so you can see on the slide on the far right, Applied Materials says they're number one in advanced packaging. What exactly is advanced packaging? One example that they show in the pictures above is turning a fairly plain vanilla DRAM memory chip into high bandwidth memory, or HBM. You maybe hear HBM3E. We've talked about it in some recent videos. It's getting tossed around quite a bit by the investment community all of a sudden here in the last 6 months. HBM is a bunch of DRAM chips stacked on top of each other to make a type of highly dense memory cube that sits next to a GPU, for example, in NVIDIA's accelerated compute systems. That is one type of advanced packaging, figuring out how to package all of those memory chips together into a cube and then place them on the substrate, the circuit board, whatever, next to the actual logic chip. But there's actually a lot of different methods involved with packaging semiconductors and chips. One of the methods for packaging together HBM, high bandwidth memory, is through silicon vias or TSVs, but there's actually a lot of other methods as well, as you can see on the left-hand side of this chart.
This pie chart from BESI shows the total assembly equipment market in 2023. Starting from the left side, inspection and dicing makes up 41% of this market. You can see our last video on the metrology market, which has small cap companies like Onto Innovation, Nova, and Camtech. We'll make sure we link that here and in our description below. And then some other equipment markets, wire bonding, die attach, other types of bonding, packaging, and plating making up the rest of the assembly equipment market. And then on the right side, you can see BESI's addressable market. They focus on die attach, 62% of their revenue, 36% in packaging, and then 2% in plating.
So in simple terms, this is a type of equipment specialist. BESI very focused on that die attach and advanced packaging. Its specific market is quite small. So this chart from semi.org, actual wafer fabrication equipment makes up the vast majority of spending in chip manufacturing. There's test equipment in yellow, and then assembly and packaging, the smallest segment, the little green portion of the vertical bar chart. Estimates were around $4 billion in total spending, and we're expected to have a nice rebound in assembly and packaging, perhaps 25% rebound in that portion of the market by year-end 2024, and then another 20% increase over and above that in 2025. Nasty downturn that BESI has suffered, like most of this industry, but an expected recovery expected to pick up pace the second half of this year. Okay, so let's talk about why BESI is important. Why are we covering this equipment specialist?
As you can see from their corporate overview, BESI is a leading assembly equipment supplier with number 1 and number 2 position in a couple of key markets. They have around 30% of addressable market share in this segment of the industry. And as we'll discuss further in the next couple of slides, chip packaging is getting more and more complicated. BESI provides hybrid bonding, wafer level assembly, and that has the potential to expand revenue and profit potential.
So just a very high level, 10,000 foot view of what chip packaging is. So the wafer manufacturing, the biggest part of the segment, is what makes those discs that you often see someone in a bunny suit holding. Where do chips come from? Once the wafer is finished, individual die or chips, little square and rectangular pieces of that wafer, get cut up and then packaged into an electronics system. This slide from Cadence Design Systems, one of the leaders in software design for the semiconductor industry, shows some of the increasingly complicated methodologies for packaging different types of chips together onto a circuit board. But it goes even beyond just the chips themselves. This slide from Taiwan Semi Manufacturing shows how some of the packaging is actually happening at the wafer level. So as the wafers get manufactured, sometimes there are multiple wafers that are getting smashed together before they're finished and then ultimately diced into chips for final packaging. So this is what BESI is talking about when they say they are an industry leader in die attach. So that's when the chip has been cut out of the wafer and then attached to the substrate or the circuit board, or advanced packaging and plating involving some sort of process or method when the wafer itself is getting some sort of packaging before it actually gets cut up into a chip. Another very generalized slide here from BESI showing a sample of what a computing system may look like. You have these chiplets. Again, another term that gets bandied about the investment community these days. Think of these as small, very specific chips designed to do a very specific function, all getting packaged together into a system using all sorts of different process flows. You can see, regardless what the advanced packaging process may be, hybrid bonding, chip attached to wafer. You can see HBM memory there, number 3, something called embedded bridge die attach. There's the wafer level packaging there on the right. BESI has some equipment that addresses that process.
BESI is a leader in die attach, packaging, and processing. Applied Materials, we've talked about, is a major competitor for BESI. Who are some other competitors for BESI?
There's an adjacent part of the process called dicing. That's where the wafer is ultimately cut up into the chips. There's a company in Japan called Disco that we still have not done a deep dive on yet. Promise that is in the works. We haven't forgotten about it. So BESI doesn't compete with Disco there. Think of them more as peers or collaborators. Then in wire bonding, there's another company called Kulik and Sofa, ticker symbol KLIC or Click. Kulik and Sofa also developing some more advanced packaging systems as well. But wire bonding, again, maybe a crude illustration, but you can think of this as just simply soldering the chip onto the wafer into the package with other chips. Advanced packaging, on the other hand, where BESI is a leader and competes more squarely with some of the advanced packaging equipment of Applied Materials, uses very different methods and technologies, especially in very complex, sensitive systems where applying heat, like via wire bonding, via soldering, maybe isn't desirable because it could damage the chip. You have these new methods that either tightly control the amount of heat so that it doesn't do any damage, or maybe just has minimal amounts of heat, figures out novel ways to bind those chips onto the substrate with materials that don't require high heat that could do damage. All with the ultimate goal, of course, creating these very complex electronic and computing systems. As you said, Casey, things like accelerated computing and AI systems are getting ridiculously complicated. All of this expands the market share opportunity for a company like BE Semi.
Let's shift over to some of their financials and analyze that a little bit. When I looked at this chart, the first thing I noticed was the gross margin for BESI. Beautiful gross margins.
Yeah, especially for a business like this, right?
Yes, absolutely. Normally, equipment companies, their margins sit, if it's a good company, in the 50% range, correct?
Yeah, that's right. Even our big industry leader, Applied Materials, which we've owned for years, fabulous company. In a good year, their gross margins are sitting in the high 40% range, maybe pushing 50%. So BESI getting some really incredible gross margins on their equipment sold.
And tell me how they performed during this downturn.
They've gotten beat up just like everybody else. But again, as you pointed out, the gross margin has continued to climb on their portfolio of equipment sold. So that's fantastic. A couple of things to take note of here. This is from the first quarter of 2024. You can see their orders from their manufacturing customers are still significantly down from the last peak in 2022. What BESI is trying to show us here, especially in the chart in the upper right quadrant, is we're now at a trough, at a bottom for equipment orders. The number of orders they've received during this downturn are far in excess of the last downturn, which was the trailing 12-month period that ended in Q1 of 2020. Of course, that's when the pandemic started and the whole world went into temporary lockdown. So the narrative here, BESI is cyclical, but it is continuing to grow through those cycles.
So it sounds like it stands to reason that BESI is going to benefit significantly from all of the new fab building that's going on. But when will that happen?
I think this took investors maybe a little bit by surprise. It seemed like maybe things had started to bottom in the fourth quarter of 2023. But you can see from this chart, orders came in pretty light, at least when you compare it year over year in Q1 2024, down to just 128 million euro from 142 million euro the year prior. Management has said that next upturn, the next growth cycle, is going to start probably the second half of this year, which, if you've been following all of our videos, especially on power chips, industrial chips, the automotive industry, that kind of jives with that segment of the semiconductor industry. We're expecting a recovery, a more full-blown uptick in activity the second half of 2024.
The stock price for BESI has been on a tear in the last couple of years. Do we see that continuing?
It's hard to say at this point. The market caught wind of the opportunity for BESI very early on. Obviously, we didn't purchase this particular stock. We've gotten plenty of very similar, or in some cases, even better performance from some of the other manufacturing equipment providers that we have picked. It's been pretty broad-based expectation that everybody in this manufacturing equipment sub-industry of semiconductors is going to be a massive beneficiary from all of the government-funded construction happening right now. The US CHIPS Act, the equivalent of that in Europe in combination, those two pieces of legislation kicking in, the equivalent of roughly 100 billion US dollars, and very similar funding rounds happening in Japan, in South Korea, in Taiwan. It is going to be an absolute feeding frenzy for companies like BESI, and the stock price is reflecting that.
Looking at BESI's balance sheet, you can see that their cash and short-term investments have decreased in the past few quarters, down to 447 million in the last quarter, as they're using that cash in share repurchases. Their long-term debt, they've been chipping away at. It's now at 265 million.
This is a key area of strength for BE Semi. If we go back to the previous slide, you can see the CAGR for the stock, nearly 40% per year over the last decade. That's incredible. Management has done a fantastic job, obviously deploying excess cash towards share repurchases when they think the stock was cheap. But in addition to that, making acquisitions of smaller equipment makers and plugging them into their portfolio. This company has done a great job on that front. And so getting back to the crux of the matter with the financials here is the run-up on the stock going to continue? Here's a look at the free cash flow over the last couple of years and the enterprise value, or EV, to free cash flow over that period of time. There's no denying the valuation is elevated at over 70 times EV to free cash flow. But this can be a misleading metric because you can see FCF, of course, when we're in a trough, in a downturn, is going to be low. It's going to take a hit. Ultimate bottom line profitability available to shareholders for things like buybacks is going to be down. So is over 70 times free cash flow too expensive? We did this reverse discounted cash flow, reverse DCF, to figure out a scenario that could happen that makes the current share price of 156 euro per share a fair value right now.
So that expectation would be revenue growth in 2024 at 20%, 2025, 40%, 26, 25%, 27 at 20%, and 2028 at 0% revenue growth.
And the reason we've modeled 0% in 2028 is we think, generally speaking, using our magical crystal ball that we have here to tell things about the future in advance.
Is that what that's for?
Just kidding. It doesn't work. But generally speaking, we think this new growth cycle that's just starting for the semiconductor industry will probably top out sometime around 2027, 2028. So for our modeling purposes, that's why we have 0% revenue growth modeled in 2028.
And we did something similar with the free cash flow growth from 2024 to 2028, starting at 100%, and then all the way in 2028, we have that free cash flow growth at negative 10%. Terminal growth rate thereafter of 9.25%, discount rate of 10% gets us to a fair value at the current share price of around 156 euro per share.
The ultimate takeaway here is not, this is what our expectation is for BE Semiconductor. This is a scenario that would need to transpire over the course of the next 4 to 5 years that makes the stock a fair value right now. And as you can see, it's a fairly high bar to clear. We are at a cycle bottom. It's not unreasonable to expect some really dramatic recovery in free cash flow over the course of the next 2 to 3 years. Us in the model doubling, let's say in 2024 and 2025 of free cash flow. That happens with cyclical businesses like this. Where things get a little bit harder, where the bar gets raised a bit for the long term, is that terminal growth rate at 9.25%. Granted, none of this factors for anything like potential acquisitions, share repurchases that could help boost earnings per share and free cash flow per share. But given this model scenario, I hope this just maybe illustrates the fact that a lot of growth for the next couple of years has been priced in already for BE Semi. Doesn't mean the stock price won't head higher. But for us personally, as we want to deploy incremental amounts of capital, our monthly savings, this probably isn't one that we're going to be inclined to invest in at this particular point in time.
We currently have several companies that are in the wafer manufacturing, assembly, and packaging equipment. This would maybe just diversify our portfolio further in a negative way for us personally.
Yeah, that's right. I think we have ample exposure across the supply chain for semiconductor manufacturing already. If chip packaging is something you're interested in and you don't have any portfolio exposure to it yet, BE Semi is a good place to start in your journey and learning about how this technology works and the potential other options available to you when it comes to investing.
That's a wrap on our episode here regarding BESI, BE Semiconductor. Make sure you hit that subscribe button and check out our Semiconductor Insider for $5 a month. And we will see you all again very soon here at Chipstock Investor.